Packy is the founder of the Not Boring Club, which includes the Not Boring newsletter, which is a community of over 50,000 subscribers. I'm obviously one of those subscribers as well. I think an early one. I should have gone and looked up my number before we got here. The newsletter includes deep dives on large public companies and broader trends, as well as investment memos and deep dives on startups. Packy has written insightful analyses on some of the most iconic companies in tech and beyond, including Twitter, Robinhood, Alibaba, Slack, and many more. And it all started a year ago?
It all started about 14 months ago. This is certainly a pandemic baby.
Does it, like, hearing that, are you just like, wait, all that in 14 months?
Yes, and it's also, I've read a free newsletter professionally, so it's hard to take it too seriously. But yeah, it's been a phenomenal 14 months.
I don't know. I mean, well, we'll dive into it. But I guess before Not Boring, I think tell us about kind of a little quick bio, how you what you were doing, and then how you ended up starting that free newsletter that I think became a lot more.
Yeah, for sure. So I, grew up outside Philadelphia, went to Duke, studied econ, did finance, was kind of on that path very much, about to go to business school. And then I found this startup on AngelList called Breather. There was no kind of open role, but the idea just resonated with me. It was, at the time, just these small little spaces around the city where you could relax or get some work done or just kind of get away from the noise. And as a young investment banker, just having a quiet place to my own really was kind of a compelling offering. So did whatever it took, pulled my application from business school, did whatever it took to get the job, interviewed actually for 4 months. It was the only place I applied, like all of that. Ended up getting the job as our New York City general manager. So did that. Our VP of operations, when our CEO left, was in the office of the CEO for a little while, helped grow the company, left at the end of 2019 after we brought in a professional CEO. And then had a plan to start something called Not Boring Club, which was going to be kind of college extracurriculars meets Soho House. When I say it out loud now, it seems silly, but I was so bullheaded about the idea that I think I probably would have just kept going until I ran something into the ground. So, every awful thing about COVID aside, for me professionally, I think it really saved me from doing this thing that was probably something that I can do a lot more easily now, frankly, and do as kind of a side thing and a part of Not Boring, but would have been a really tough business to scale, which is a lesson that I should have learned from Breather. That worked out really well. Had this newsletter that I've been writing on the side, and then just decided to kind of go all in on it when the pandemic hit, and thought maybe I could pay my rent, and it's grown from there.
And I guess, like, were you always a writer? I mean, is this all, something you were kind of doing in your spare time when you were at Breather? Or like, I was an investment banker at Bank of America Merrill. I didn't have a lot of time writing newsletters. Yeah. But is this something that's always been in your DNA or relatively recent?
A little bit. So I think there's, when I was young, yes. And then when I went into investment banking, no. When I was at Breather for most of the time, no, which is actually kind of why I wanted to start something like Not Boring Club, where I could do something else besides kind of work and hang out with friends to keep my brain going. But, when I was little, I was writing, I had a little Miami Herald like newsletter or newspaper on Post-it notes that I would write because my dad was a consultant and was consulting for Miami Herald. When I was in high school, I would try to make my teachers laugh by writing kind of really well-researched, but funnier essays than anybody else in the class. Philosophy minor in college, so did a lot of writing there, and then just stopped. And then finally, kind of like a few years into Breather, we were in this weird spot where we had expanded way too fast, and we needed to figure out kind of what the company strategy was and get everybody aligned. So for a couple of months, me and Ben Rollert, who now runs a company called Composer, just kind of went into a hole and came up with a new strategy for the company and wrote it and disseminated it throughout the company and then executed it, and it worked. And things have happened since, and Breather just sold for $3 million, so it didn't work that well, but took our margins from negative 25% to positive 25%, like a good turnaround. Mm-hmm. And I saw in that kind of the power of, if you can write something compelling that's backed by, actual numbers and an actual plan and all of that, but actually gets people riled up, then there's something there. So I think that kind of re-sparked my love for writing.
That was your Jerry Maguire memo?
That was my Jerry Maguire memo. I had the goldfish, the whole thing.
Yeah, the whole thing. I love it. And so what, at what point did this kind of occur to you that it's like, all right, maybe this could be more than a newsletter. Maybe this is, I'm sharing it with some friends. At what point does it start kind of taking on a little bit of a life of its own?
Yeah, so I actually had a year ahead of time where the first year was actually called Per My Last Email. I was at Breather. I was still writing it. It was a bunch of links that I was reading, and it was something to just kind of frankly keep my brain going while we had brought in a new exec team. And so did that for about a year. And it was really kind of the first couple essays that I wrote after I changed the name to Not Boring, and was like, look, I can't just do links. A lot of people can curate better than I can. Let me just try to write essays that combine strategy and then like some bit of pop culture, economics and some bit of pop culture. So I wrote something on Schumpeter's Gale or creative destruction and the Mickey Mouse Club, and like just tried to do a bunch of those types of mashups. Yeah. And I was getting really good feedback. For the first year, I was petrified that my friends were in a text chain somewhere saying like, what the hell is Packy doing with his life? And then when I started writing these essays, those same friends, and like particularly the ones that I was most worried were going to make fun of me, were reaching out and they were like, dude, this is really good actually. Like you could do this. And so asked my wife to give me kind of 3 months after I decided not to do Not Boring Club to see if I could grow this into something. And, followers just kind of started picking up. And so it's just kind of ridden from there. There's never been a point where I've been like, all right, this is the thing. It's just kind of slowly evolved.
And is there, when you think about the growth and now that it's kind of taking on a life of its own, are there things that now you kind of think about it as almost like a business owner, like things that you do that kind of accelerate the growth, or are you testing? Are you trying to figure out like what is the engine driving this train? Or are you still in the like, hey, let's just keep throwing the spaghetti at the wall and see what sticks?
Yeah, I think I'm developing a sense for what works and what doesn't. Still, like some of my most popular essays recently, I thought were some of my worst. And so it's always a little bit hard to tell, but I'm not doing too much on the intentional growth side. Like for a one-person newsletter, when there's so much content out there, like people don't want more content. They don't necessarily want to be a part of your growth tactic. I think it's really like, how can you make the product as differentiated and unique and fun and compelling as possible and make people think. And then as long as I can keep doing that, then people will share it. The by far, I had one time early on where I went on Product Hunt and got to number 1. And that was like the first, or number 2, sorry. That was like the first big jump in the newsletter. And since then, I really haven't done many intentional things. It's really been a lot of word of mouth and then sharing on Twitter.
Yeah. Yeah. Kind of interesting thing early on. And it might just be kind of the nature of you and your storytelling, but like, one of the things I found really interesting about Not Boring was that whereas I think other newsletters try to kind of be kind of a little unbiased, right? And like obviously the entire history of media is trying to like go and be this like completely neutral third party with a maybe an editorial page, and even that's like very very kind of limited. And then you come in and you're like, no, this is what I think, and I'm like invested in this company, and if I'm not invested yet, I'm gonna invest in this company. Like, what? I guess like, was that something you were always like, let's just do it, or was that something that like took a little bit of an evolution?
It took a little bit of an evolution, but to even think that there was enough planning that I would have even thought like, can I do this? It was like really kind of one step at a time. Where I had a friend come to me last summer. And he's like, I'm doing this business. He was super smart, Russian roboticist, sold a company to Airbnb, was there, left to start his own thing, real estate related, and was having a hard time explaining to investors why it wasn't a real estate company and why it was a software company and how you should look at the business. And so he asked me to write it up. And so I did, and I wrote it up as an invest memo, and I sent it to my friend Jonathan Wasserstrom's syndicate, and people invested there. And that went well for the company. And he met investors outside of the syndicate and had this document that he could go back to. And so he was like, you should just start your own syndicate and do this. Like, this is a really valuable service for our company. And so there wasn't a point where I was like, oh man, but I'm a journalist. Like, I'm certainly not, like, we'll say it on my home, like, I am not a journalist. And so I was like, yeah, cool. Like, I don't know. This is my own one person thing. I have no job security. I have like, at that point, no money. So like, or making no money on the thing. So if I can't go do things that I think are interesting and that can help my friends, like, why do this in the first place? Why not just like go get a high paying job somewhere? And so just kind of stumbled into it that way, where one thing led to another, led to another. I also did these sponsored deep dives where a company will pay me. And the first kind of 3 that I did were Main Street Pipe and Ramp and like just companies that, since then have done really well. So, I'm certainly not taking credit for that, but I think it's, hopefully as I build this track record of like, yes, certainly I'll be biased because I'm investing. So there's like, at some point I wasn't biased and then I met the company and then I became biased because I liked it and wanted to invest, or they're paying me, but that's actually even a tighter filter than the investment side because I have to publicly back the company and figure out what the compelling story is. So I don't know. At that point, as long as I think I can build out a track record that shows over time the companies that I write about do well, I'm fair and balanced, I'm not knocking their competitors for pay, like I'm not doing any of that. Media is generally biased, and I wouldn't call myself a journalist, but like obviously Fox and the New York Times are two very different publications. And so I think just being more honest and upfront about the fact that I am like inherently biased in everything that I do, and the kind of knot that I'm tying and trying to untie is how to manage those things at the same time. Like that's the fun part of this to me, is trying to like not get myself in trouble with this. But I don't know, there's just so many fascinating companies to write about. I think that the other thing that helps, and then I'll get off the standard, but the other thing that helps is that I'm always optimistic. Like the call that I've gotten the most wrong was being like going kind of short and bearish on Bill.com. And that I think taught me, among other lessons, like maybe I'm just not good at being a bear. So if I'm always optimistic, then it's not going to seem weird or like overly optimistic when I write about a company that I've invested in or that is paying me to write a post, because that's like kind of how I view all this. Like I'm just happy to be in the seat where I get to meet all these people and hopefully help tell their stories.
Yeah, completely. And are you now at the point where you're kind of meeting enough folks and people want their stories told that you're kind of saying like, I might not believe in this as much, or I'm not fully onboarded. And so like, just kind of push that on, even though the money's there.
That actually happened kind of from day one on the deep dive one. Like after I did Main Street, I think I'm still the top Main Street referrer from that one post. And that was when the audience was much, much, much smaller. So after that first one, Nick at Main Street was telling everybody else how well it went, but then people read it too, or the biggest one was writing about Ramp. Everyone read about that. And I think because it's Ramp and they have a cool story and they're a great team and all of that, people see that kind of come across in the story. They're like, I want that for our company. Yeah. And sometimes I'd be like, well, I'm not going to be able to do that for your company because like you didn't raise back-to-back rounds from D1 and Stripe. You didn't like all these, some companies are just less interesting. And there's plenty of companies that are going to be phenomenal businesses that I probably just can't write about because my audience is going to be like, why? Like, I do not care about this medical device company. Yeah. I'm never going to buy a medical device in my life. So what am I doing here? Mm-hmm. So that's kind of the balance that I have to get there. But I'd say probably of the companies that come to me and ask for a sponsored deep dive, it's probably 1 in 6 or 7 that I end up writing. Yeah. And wow. 1 in 6 or 7. Yeah. Okay. So that's, that's pretty tough odds for somebody coming in and wanting to get in the mix. And I'm sure, do you think about, all right, you're at 50,000 subscribers. That's the demand level today. Presumably the growth curve goes up. You have more of an audience, you have more demand. Obviously you can price things higher, but like, do you ever think about like, all right, there's going to be a capacity issue, right? At some point, right? It's like both your capacity and then your readership capacity. Like, how do you think about, from the business model perspective, like how you want to grow that out, if at all, or does it just stay kind of where it is today? Yeah, I think if anything, it scales back from where it is today. I don't think necessarily, like I said, there's plenty of good content out there. I don't think like adding 4 people to the Not Boring team and banging something out 5 times a week, like the pieces are so long. People hopefully get through 1 out of every 2 pieces. And so adding a 3rd one means they'll get, they'll get into 1 out of every 3. It means that I'll have a bigger audience, but the engagement will be worse. So people will be paying more, but performance won't actually be that good. And so like, it just all gets kind of misaligned. I think kind of the dream state is if I can make, as much from 1 sponsored deep dive a month as I do from 2 now. And just kind of scale it that way, as opposed to just trying to jam more content down and really, being able to put a couple of weeks into each piece. Yeah. Well, I mean, we've gone down the business side of this, but I think like stepping back, the thing that I think resonates most with people is, going back to
the syndicate story is that narrative piece, and like helping companies. I think, even public companies, like helping kind of tell a story in a way that resonates with people, from both investors and consumers. And just kind of want to know from your perspective, like, what do you have a process? Do you have like as you're thinking about a company specifically, how you create what ends up being like a very kind of interesting new take on what they're doing, or a new framing on what they're doing?
Yeah, it really depends company by company. Like sometimes, I'll know I need to write about this company and this is what my angle is going to be. And I think this is undercovered. So like writing about Slack was like just something that I was talking about to anybody who would listen to me, that like Slack was undervalued and underappreciated and all of these things. And so I knew the angle going into that. And it was just like, how do I find as much evidence for this case that I've been trying to make as humanly possible? Many times it ends up just being, I'm going to go read everything that's been written on this company. I'm going to listen to every podcast that the founder has done. I'm going to go on Tegus and I'm going to look for the bear cases. I'm going to, when I'm really bullish, like go on Twitter and ask people what I'm missing with this company and like why I should be less bearish. And then I kind of just like sit there, and it's not like an intentional, like meditative state kind of thing. It's like, I have my hands on my keyboard and I'm thinking like, like how do I get in? And that's, I think, probably like the most wasted seeming time, but ends up being the most important, which is figuring out what the angle into that company is that nobody's kind of written about before. And so I think that's the important thing. Like if you're just like, look, this new company that does kind of the same thing that this company did before and raised a bunch of money from these, like, it's not going to be particularly compelling, but you're like, oh my God, if this company does these 19 things in a row, just in the right way, like look at what they could do. And so I think it's that as one side. And then the other is, I think, like business models and like a deep analysis, particularly of startups, because numbers aren't public and they're more gun shy and all of that. Like that stuff I think is less covered and really interesting to people. Like I was talking to somebody the other day who said he was talking to somebody at Airbnb who was an engineer. And he was like, I just like, as an engineer, I've worked in tech forever, but I didn't think about like the business side. And it's not like I don't have access to it. And it's not like we don't have town halls, but like, I just didn't think that part of the business was cool. I thought the cool side of the business was just like all the stuff that we were doing and what we were building and all of that. And so I think trying to make like the business side a little bit cool as well is part of it.
Yeah. The business side of tech, nobody thinks is cool these days. So that's, not a lot of interest there. What about that? So if you had to think about, because a lot of founders listening, and we're kind of interacting with founders every day. And I think, a lot of outcome, really company outcomes, which are come down to, ability to raise capital, ability to hire, really come back to this question of like, can you tell this story in a really concise way? Can you inspire people with a narrative? Do you either kind of from your experience at Breather, your experience investing, or even in the 7 companies that you're not writing sponsored deep dives on, like are there kind of threads that you see that are like things that people, common mistakes people make, or as you're thinking about portraying this?
I think the biggest thing is figuring out where you're differentiated, or like kind of what your strategy is, and aligning everything around that one thing. So some companies will just completely overshare, but that's kind of their brand and they focus on Gen Zs, and that's great. Some companies are Apple and they're super tight-lipped and they let other people do the talking for them, and that's great. Some people like to, have at Breather, our board advised us to have like these 10-page decks, and like that was it, and that should be our board deck. And I think like generally sage advice to just keep it super clear and concise. For us, like I actually thought it was terrible advice, because we were kind of in the middle of this transition and we had some like really interesting things going on, and we were coming from, I don't know, I'd say 4th place in the flexible workspace industry. And so it couldn't just be like, yeah, I don't know, our revenue's growing and blah, blah, blah. And like, if we continue to sell against WeWork, we'll be fine. Like, I think you had to take a really weird and different attack. And so like really getting on board about the story of like, here's why this like crazy group of people has a shot at taking down or stealing share from this kind of more established group of people. So I think it really depends what position you're in, but like just being really aligned on the whole thing. I would say another mistake is, as I talk to companies and see kind of what resonates and what doesn't with the audience, I think when companies are too kind of like managed in their image, and I know this is counter to what I was just saying, like if you're Apple, great, go and do that. But like sound bites just are like a real turn off to people, and like controlling your story too much is a real turn off to people. And I think inside of a company, and certainly I was guilty of this myself at Breather, but like you think that all the things that you're doing are like really secret and important, and really probably the best thing that you can do is to like show what you're doing, or at least like do the thing and then like immediately say like, holy shit, this is what we just did. And like, that's why that was cool. So I think probably sharing a little bit more about the like inner workings of what's going on is really good too.
Yeah. It's like an authenticity, and it's like, it's funny. It's like interpersonal. It's like authenticity and vulnerability is like, that's resonates with people, and that resonates, with people on a company level also.
Totally. So the North Star startup story that I've written is still that piece that I wrote on Ramp after they raised those 2 rounds. And like, certainly there's a bunch of interesting stuff, but the most compelling piece of it to people was that Eric was just like, I'm going to go fully open kimono down to like, here's the date that we got the first term sheet. And then here's who came in afterwards. And here's why we chose this investor over this investor. And here, like, and so just being able to see inside of that process, I think it's like really fascinating to people, and gives you a chance to explain, like, as a founder, how you're thinking beyond just like, we hit our growth targets this quarter and we feel really good about the team of people that we have in place here. Like, that is so tired and doesn't stand out. And I think that's, I just don't think you get much out of that relative to the effort you put into like putting something out there if you're not actually going to provide anything new or novel.
Yeah. I mean, I think I remember reading it at the time and being like, wow, like, it's like, I think kind of early days of people putting out their Series A decks and that sort of stuff, but even like times 5, because it's the actual process. What was the origin story there? Like, what kind of, who came up with that idea? And then like, I bet a bunch of stakeholders who had to get comfortable with, hey, let's go put this all out in the open.
Yeah. So Eric abstracted a lot of the complexity behind the scenes away from me and kind of managed that. And to me, he just, he called me one day and he was like, look, our story just leaked in the information. And they got like, most of the details kind of right, but like, that's not the story. And like, it kind of sucks for our team that you've been like working this hard and like, we have a plan, and then like unceremoniously, it's just like leaked and people kind of care and whatever. What if we just like told, would your audience at all find it interesting if we told the story of like how these 2 rounds came together back to back, and like what it feels like to have that much money show up in your bank account, and like all those like kind of things? He was like, I don't know, like, would your audience like, do you think they'd find that interesting? I was like, yes, please, like 100% they find that. And he's like, all right, cool. I have to go talk to some people. And so he talked to some people and he's like, yeah, open kimono. There's like a couple of things that we can't share. Like, we didn't share an exact revenue number, kind of because it's not a clear number. And so like there are some things that we weren't able to do, but like 99% of the stuff that I wanted to put in, it was totally cool. So that was a phenomenal process. And like late night phone calls, and I was like, all right, cool. How do you think about like this thing? And I think you could do this. And he's like, I see why. And we thought about that a ton. And like, here's why we actually thought, because I was like, oh, cool. So you're going to go SaaS soon. You're building actually like you're a credit card, but you're building all this software for companies. And so like, oh my God, you're going to have interchange and you're going to have SaaS, and like, holy shit, like that's where this is going. Right. And he's like, no, interchange is a phenomenal model. And like, we thought about that, but actually you can take interchange and turn it into software. And then like this whole other thing happens. You grow faster. And if you tie that to a high product velocity, then like all of a sudden you just like rev so much faster than anybody else. If you're focused on turning interchange into product, like you're going to be hard to catch. And so just like, I don't know, when I'm able to really learn something about the way that somebody thinks about a business from the inside, and like where the obvious thing is wrong, like that is fascinating. And founders have that seat more than anybody right now. And I guess, investors do to some extent as well, but founders have that seat where they're sitting in the room and saying like, yeah, we probably should do this, but like, we're actually going to do this. And so the more you can say like, why did we go do this crazy thing? I think the better, particularly if things go well. And then you have this like, this corpus of you kind of saying that you're going to do something and then doing it over time.
Yeah, completely. Shifting gears a little bit, I think about, it kind of very interesting where you sit and where Not Boring sits. I mean, when you think about what like that ramp story, I mean, fundamentally, like large media companies are normally the ones who are kind of telling that story in a very kind of unsexy way, and now it comes to you and your audience, and that's actually the was, I think, a very, very successful kind of round announcement for Ramp in that case. How do you think about like what you as part of a broader ecosystem of people, and like what you would call the creator economy, and like what this means, and like where do you think we are in the evolution of that market? Are we in the early innings? Has this kind of come full circle? Like where do you think we sit?
Yeah, I think we're early innings, and I think it's the kind of creating that I do might be even overhyped, but I think in terms of just like the one person businesses or small teams of people, like I think we're in the super, super, super early innings of all of that happening. I don't think like, TechCrunch is going to be replaced by a bunch of Packys. Cause like I said, I can do 2, maybe 1 of these a month. Yeah. And their job is to like get, if you want to know who got funded recently and, what are the most important companies that got funded recently, you should definitely keep reading TechCrunch or The Information or whatever else. Like I'm never going to be able to compete on that. But if you want the like, wow, here's like this inside look, and they can do some of that reporting too and do sometimes as well. So, but it's just among a bunch of different stories. But if you want to go somewhere where it's like, cool, I'm going to get the news, but then also an analysis on this company and release in the ecosystem and all of that, like that's hopefully what I'm going for. Like if you read enough kind of stories from big publications, like there's very clearly kind of a template. And I try to like not have a template at all as I'm writing these things, which I can get away with because it's one person. And so I think that's, for the broader creator economy, the really interesting thing is you can have all these people who are differentiated in these like weird little ways and fill these weird little niches that can do things that larger organizations can't, and sometimes can come together and work together on projects. Mario Gabriel does it with the S1 Club, I think really, really well, where he just like brings together a bunch of experts on a particular topic for one piece, and then they go away. Or he just did it for all of crypto, and then they go away. And so I think that those types of things where you can get down to that atomic unit of one person, each person gets really good at their one thing, and then they can kind of combine forces. I think we're in like the very, very, very early stages of all of that.
Yeah. Do you think as with things opening up, people spending more time in the real world, less time on Twitter? I mean, I think about we've never met in person. We've done a bunch of Zooms and talked on Twitter, and I feel like I know you, but like, okay, this relationship is gonna, we'll be in Brooklyn, we can hang, will look different. And I think a lot of people's kind of interaction, with digital footprint will look different. How do you think things kind of come back, if at all, or is this just like the new normal and we're kind of in this world?
I think it's going to be so interesting. I actually, I make predictions on a lot of things. Like I'm not even going to make a prediction on this one. I think sometimes I'm guilty of extrapolating too much from my own experience. And one, I'm so excited to hang out with people in person. I'm excited to hang out with you in person and meet people in person. And then I'm like, wait, I had to like get dressed, get on a subway, walk how am I possibly going to do my job and then also go socialize with people when I'm taking 3-hour chunks in the middle of the day? Or like, I have a baby, like, how am I going to go hang out with people at night? And so like, it's something I really want to do. And I'm just like, I don't even remember how we possibly did this in the past. I think the very clear dividing line on this of people who are going to like it and people who are not as much is if you make a salary, this is awesome. Like then you can justify like, yeah, I had to go grab beers with a client. Like, I don't know, there goes half the day and you're making just the same amount of money. Whereas me, I'm like, oh man, I missed out on a piece. Like, hope I can pay my rent this month. So I think like that's going to be the dividing line, whether you're kind of self-employed or working kind of on commission or on whatever, or if you're a salaried employee.
Yeah, the production, the inputs, outputs.
100%.
Yeah. What does it take? Like, if you had to go time wise, like, what does it take for you to actually get? I mean, on average, they're what, like 4,000 words or something like that? 4,000
has become a short piece for me, unfortunately.
Okay.
So I think, they're anywhere between 3,000 and 8,000 words per piece.
Okay. So what's, and I imagine it's one of those things where the 8,001 doesn't take longer than the 3,001 necessarily. So what's a piece generally take for you?
A piece generally kind of all in, I would say takes 30 hours. And that, that includes driving around and listening to podcasts. That includes reading, that includes talking to people, that includes sitting and staring at a blank screen, and then the actual writing and editing piece. But for the past, 14 months, I've been working 7 days a week, pretty much all day, every day. So it's definitely not, it's definitely a ton of work to do this. About 30 hours.
Yeah. And you, do you see your process changing at all, or is that just, that's the process? Trust the process.
Yeah. Trust the process. It's kind of the process. Like, I don't know, my wife is an operations person. And so she's like, well, why don't you just cut out that time when you're just sitting there on Twitter? I'm like, I know, I obviously that's like the optimal thing to do. But if I don't have that time, then like things aren't just like bouncing off each other in my brain. And then like the ideas don't come. I think the more that, then you talk to other people who are like, why don't you just like templatize it more? Like I do this thing where I ask people the same 5 questions and then I just take their answers and send it out. And then you become just like those people. So I think the more there becomes this like very kind of templated thing, the more, the shittier the product ends up getting.
Yeah. And what's your pipeline like? How far in advance are you thinking through this stuff?
Yeah. So the Thursday, the investment memos or the sponsor deep dives, I kind of know a couple of months in advance. I'm having conversations with the founders. I'm having conversations with external people and just starting to kind of read. Normally the Monday pieces end up being like after I send the Thursday piece, decompress for a couple hours, have a few calls, and then start thinking about what it might be. Recently, it's been like Saturday morning. I figured out what I'm going to write about.
So you're really fun on the weekends.
Oh, awesome on the weekends. My wife is an absolute saint. Like, and luckily, like, COVID meant that she didn't have to give up social plans because I was sitting in the basement writing. But yeah, no fun on the weekends at all.
Yeah. But this is the lifestyle you're choosing. This is, do you think you'll change the dates? Would you send it out on a Wednesday just to like save your weekends a little bit?
It all fills up. Like if I send it on a Wednesday, then maybe I have to send the details on Saturdays or something. It's 7 days. So it's not like there's some push. I think probably there's this idea of Parkinson's law where you fill up the amount of time available to you. Yeah. Certainly when I'm in a time crunch, like for whatever reason, even if I know what I'm writing about, until like Sunday, it's really hard for me to actually like sit there and write. And so maybe if I don't have Saturday, like that becomes Friday or, something like that happens. Yeah. But we'll see. It's definitely nerve-wracking for sure.
So shifting gears, because we have some Q&A and I want to open it up to the audience, but your superpower is going in and telling these company narratives and, here's the master plan and this is where ramp is. Like, I know that this started out 14 months ago as a newsletter, but, it's a meaningful platform and, only growing from today. What do you think we've touched on it a little bit, but like, if you have to say like, this is the not boring master plan right now, what's it look like?
If I had gotten super rich, super young and retired early, and like the 2 things that I'd want to do, or 3, and they're related, is write, talk to smart people, and invest. And so I think like if I can write and invest professionally, I'll be really happy. And so hopefully the idea is, continue to scale the audience, maybe scale AUM, but probably not. I like the idea of just kind of smaller, faster funds. But if I can continue to do those 2 things and not get myself too conflicted that I'm not good at either one of those things, like that's the dream for me. And so hopefully both of those get bigger, my quality gets better, all of those things kind of keep happening. But I think like one of the biggest risks to this whole thing is if I try to do too many things, I think then each thing gets a little bit worse. And there's plenty of other options again for people to go turn to if I lose focus.
Yeah. Talk to me about the investing side right now. Like, where are you spending time, and it works. It's clear it works so symbiotically. But like, how's your process on the investing side? And as it becomes more time for you, like how are you kind of dedicating time and mind share to make sure you're kind of seeing great things and deploying into great things?
Yeah, it's That's actually, if anything, where I need to spend more time. Like my big challenge and blessing in life is how optimistic I am. So the challenge has not been seeing deals. The challenge has not been investing in deals. The challenge has been like, oh man, like I every week take a step back and look at the portfolio. I'm like, is there anything in here that I like was just being too optimistic on? And so far it's still really early. So who knows? But I think the processes are just so symbiotic where I'm spending a fair amount of time in Web3. I'm spending a fair amount of time in fintech, a little bit of metaverse type stuff, a little, and then just little bits and pieces kind of all over the place. Generally, the kind of the themes that I end up investing in are things that I've written about because, even if it's not a company saying, come write about me, I wrote something on APIs. And so people are like, oh, cool. Like, I liked your piece on APIs and I'm starting an API first company. I'd love to talk to you about that and maybe invest, or wrote about the metaverse or Web3 and kind of same thing. So by writing, I put out the beacon of kind of the things that I'm interested in. And then hopefully that pulls people in either directly or through other people who are like, oh, I'm looking at this company. Can you talk to them? Because I know that you wrote about X, Y, or Z topic. So they work together really well. And then when I'm talking to these founders, like I'm just kind of soaking in a bunch of stuff that hopefully at some point bounces off of something else and becomes a piece in the future. Or, I think there's just so much good there that, the overall week is 80 hours and 20 hours is spent kind of talking to companies and investing, and 60 hours is spent writing. And then there's a lot of overlap in the research piece and the investing piece. That's kind of how it all breaks down. But it's been a blast. Like I really, coming from operating for so long, I really didn't want to sit here and just be like, I don't know, this company's like not doing what I would have done. And then just like backing off and that's it. Like I want to put skin in the game if I'm going to go out there and kind of write things about what I think is happening.
Yeah.
And so I think that's why it works pretty nicely.
What is your investment process? Like, how do you kind of balance your optimism with, just the limits of how many companies you can invest in and companies you can meet?
Yeah. So I think one is trying to stick to things that I'm either, have written about or am knowledgeable about enough to screen before I get to the call in a lot of cases, because I think I can be swayed, frankly, like on a call. So that's upfront. I screen out a lot of companies before I ever talk to them. Yeah. Two, once I talk to people, in the beginning with the syndicate and particularly with personal checks, but I would be on the call and I'd be like, awesome. Like, I'd love this. You're not thinking big enough. Like, here's your act, like telling founders, why they weren't being optimistic enough. And then saying yes on a call. I've, except in the rarest of cases, stopped saying yes on a call. And then there's a little bit of an intentional process where I'll go talk to people about that particular company and where it fits in the industry. And like, I can generally sense if I like the industry, and then I need to kind of figure out, if I'm not as familiar, how I like this company and the team relative to other things. So that's a part of it, particularly because like, I think for me, if I invest in the second or third best company doing something, and then I write about them, it just makes it really awkward when I have to be like, yeah, they're really good at this like very one particular thing. Yeah. And like kind of ignore the elephant in the room that they're like not nowhere near as good as this other company. So that's one of the big things, is just like kind of the competitive dynamics of talking to people to get a sense of that. And the other is more of a gut, like if after I get off in half an hour, I'm like, all right, cool, I need to get back to the founder and say yes, then I know that I like really love the deal. And if 4 days later, I'm like, oh yeah, I was supposed to get back to that founder, then it's like probably not, that's not like the most.
Let the internal heuristics do what they do.
Totally.
Yeah. All right. Well, I'll go to Q&A because we have some from the group of relevant for today. Robinhood, buy, sell, hold. If you're not going to do the full S1 takedown, or no?
That's such a good question. Depends where they price. They did like 900 and something in top line, which is great. And they'll probably, they might get memed up before I have a chance to buy up to God knows what, although I think they are doing 35% of their shares are going to Robinhood shareholders, but I don't know. Like the FINRA fine was one thing. They've got fined $70 million. I think they're going to run afoul of regulators again and again. They've shown like the thing that's gotten me about the company is just that they've shown this like total disregard where even if they're playing by the letter of the law, then like they're probably like, they're definitely not playing by the spirit of the law. And like adding confetti in, and I'm like certainly not a purist, but I just think that it's going to piss off regulators enough at some point that they're going to get in real trouble. The best bull case I've heard for them, like even from a moral perspective, is that, you know, if you look at it, I think it's the average account or the median account is tiny in Robinhood. And so you're talking about a lot of people who like, if they lose $400, like that sucks, but it's not the end of the world. If they've traded weekly options and they're able to somehow make $16,000, like that is life-changing. And so you can't think of it like a bunch of people coming in and putting their life savings into this thing, and their life savings are like really meaningful and something they've spent a long time building up, and then they're YOLOing it on options. It's, you know, some people it actually, I think, makes sense to go and try to turn your $500 into $20,000. And if it goes to zero, that's a risk worth taking. So that's the best kind of moral bull case that I've heard for Robinhood, and like, who are they to judge? But I don't know. The other thing is, I think that there is going to be a proliferation of kind of trading as a feature in a bunch of different apps. So if you're obviously in Square, you can do it. You know, if you're in Chime, you'll be able to trade. If you're in, you know, whatever particular kind of niche neobank, we'll end up having trading. There's a bunch of good infrastructure being built there. And so maybe, you know, people take market share from them and the space ends up being not that attractive. Like I think Robinhood attracted a ton of competitors with its kind of just very loud success over the last year and obvious kind of weak points. So whether or not they can hold up through that will be a question, but I think it's going to get pumped up in a pretty big way in the short term for sure.
Yeah. So who do you think wins if it's not Robinhood? Is there, if you look around and you're like, this is, I mean, because I think, well, I guess I'll say this, like, do you think that this whole like democratization of investing, that like the, you know, meme stocks, that we're just kind of, this is going to persist to some level? And then if we're at, you know, the democratization at the very least, like who ends up winning that market?
The consumer. I don't know. I mean, I think Robinhood is obviously in a very good spot in that market if that trend persists, and I think it will. Like, I think things rarely get less crazy, and everyone's like, "Oh, that was weird," and let's go back to our Charles Schwab accounts. Yeah. But I do think it's more that there's going to be a lot of different things to invest in, and stocks are going to be one piece of it. I think there's going to be, you know, kind of meta apps that sit across a bunch of different asset classes. And so there's a bunch of alternative investing platforms. Robinhood does kind of stocks and crypto. Maybe something lets you trade all of those and build portfolios and makes it even more social. Or, you know, there's obviously public and common stock are trying to make it more so. So there's a bunch of different ways that people are attacking it. I don't know what the winning plan is. I do think that the democratization will continue to happen. I do think it'll keep getting crazier. More people are going to start, you know, investing in startups and other weird asset classes. Like lumber opened people's eyes to the fact that commodities can be kind of crazy. Yeah. And so I think it's like, it ends up getting just more diffuse. And I don't know if there's like one reason that Robinhood is the place that people go. Like, I don't know what their moats are long-term.
Cool. All right. What is the most contrarian business that you're bullish on?
Oh, yeah. This is a small one. It's like too early to even talk about, but this is one where like I'll talk to other kind of or VCs. I wouldn't count myself as a VC, but I talk to VCs about, and they're like, no chance it's gonna work. But there's a guy who's trying to build the New World's Fair. Like, he's like, you know, there's international expos and there's all of these like other things that happen in the world. Like Dubai is doing like their big Dubai Expo, and like those things suck, and they're marketing events for towns. And like, what we need is actually like an old school World's Fair where the best innovators in the world come into one place, and you pick a random city in the US and you build it up, and it's like Disney World. And I think there is, you know, if you can own, there's a million challenges to making that happen. Like, I think it is a ventured bet in like the sure sense of the words, except for maybe increasing returns to scale, but where, you know, there's a 5% chance of it happening. And if it does happen, I think it's massive, because I think what you can own is kind of like this monopoly on optimism, or at least like the brand around optimism. And so if you can kind of usher in an era of optimism and then be the ones who people think of when that happens. You can build a media company. You can help develop real estate in different parts of the country if the remote thing keeps happening. Like, there's so many ways to take it that it feels like it's most likely going to zero. And there's like a very small chance that it could be $1 trillion thing in a couple of decades.
All right, the new World's Fair. It's like CES, but actually innovative and
100%. Yeah.
Okay, fair. All right. This question, curious. No. Who's the most underrated writer in the game right now?
Ooh, good question. I mean, like, the most impressive to me continues to be Byrne Hobart. And I think like he gets some love, but not enough. He's just like an absolute genius. He writes the diff on Substack, but you can say like, what happened to the Austrian economy in 1923 and why? And then he'll give you like a 17-minute answer on like all the things that led to that and whatever. And so he writes these essays that are better than anything that I write every day. And it's just like absolutely insane. So he's appreciated, but maybe like underappreciated. I like Tina Hay at Pace Capital. I think is just like a beautiful, beautiful writer. And she's getting really into Web3 stuff now, but has always been a little bit ahead of the curve. So her newsletter is Fake Pixels. But I think that she's phenomenal as well. And then there's all the usual suspects, but those are two that I think deserve some more love.
Okay, good. Yeah, Tina's awesome. Okay. Why didn't you decide to get into traditional venture capital? Because it's so much fun.
It's so much fun. I really like, at Further I managed a 150 person team and I had bosses and like did that whole thing. And I really liked it. And then I got out of it and I was like, wow, this is like really nice that I can just kind of leave room for optionality. I think like there are obvious arguments for working at a top tier VC. But for me, like I'm really optimizing for like, let's see where all of this goes. It's been so accidental already that I think there's no reason not to just kind of see where these accidents keep going.
Yeah. All right. So what's a topic that is super interesting to you, but you hesitate to address it publicly because it would run counter to the thing that you feel like the crowd expects from you? This is, there was a thread on this on Twitter and they wanted to put your feet to the fire and actually get you to answer.
So I non-answered it in my newsletter this week. That was Preston Pasek's question. And it was a really, really good question that I don't know, like, I feel like maybe from the outside, it looks like I have like a lot of things going on in my brain. And like, there's things that like, and there's just really not that much planning. And like the thing that I write about in any given week is like the thing that I am most interested in that particular week. So I really haven't held back from writing. Like, this is what I want to be doing and what I want to be writing about. And like, there really isn't anything that I'm not writing because I think that it runs counter to what the crowd expects. Like, I really thought that when I started writing about, particularly like I wrote the first piece on crypto that I wrote was about the metaverse and Web3. And I thought people were going to absolutely hate that. I was like, I want to explore this because I think these two things fit together, but I've been writing about like public companies. And so I think people are going to hate this. And then they liked that it was like a little bit weird. And so I kept kind of pushing in that direction. But I don't know, the fun part, again, about being just kind of solo here is that I'm able to follow the curiosity and see where it goes. And there's really no holding back. There's nothing sitting. I'm pretty empty-headed most of the time, I would say.
Do you have a view, like when somebody asks you about, I guess your audience in particular, aside from the crowd, like, do you have a view of who your audience is, or like, do you, and does it, in terms of like, have you done the analytics, and then like, does that factor into how you think about, the stories you're telling and how you're processing things?
Yeah, for sure. It did a little bit, I would say, in the beginning. So the audience started out as my mom and like, a few friends. Definitely became, because I was writing about tech companies kind of early on, a lot of people in tech, or I would write about the company like this was a good early growth hack that was kind of accidental. But if you write about a company with a an active enough Slack group and enough employees, like a bunch of people will sign up if you write about their company. And so I think just because I was writing about companies, a lot of people from tech signed up. Then I started writing a little bit more about public companies, and Seeking Alpha started cross-posting everything that I wrote. So it became a little bit more finance. And I would say that actually probably influenced me more than anything to like really, there was a period there where I was like, all right, I need to think about another public company to analyze this week because that's what Seeking Alpha wants. And that's what my audience has come to expect. Mm-hmm. And now I do that less frequently because who cares what commenters on Seeking Alpha want out of Not Boring. But yeah, I think that's kind of the audience where I've ended up is this intersection of tech and finance. And it really is kind of like 50-50 in those two categories, or 40-40 with 20% just kind of generally curious people. But it's gone so all over the place recently and like gone down such deep rabbit holes that people unsubscribe. There's probably 100 unsubscribes every week. And some because they've read it and don't like it, or some just because they're like, Jesus, this guy sent me 2 newsletters this week. Like I'm done. But I think over time it's gotten to the point where, now the readership is down to kind of explore just a bunch of different areas, which has been really fun.
So we had, people ask about the writers that you look up to. Who are the investors that you look up to? Like, are there people that, public or otherwise, that you kind of, either their written stuff or when you talk to them, you're just like, they give me some of the ideas that end up kind of cycling through into Not Boring.
Outside of FirstMark, obviously. So Adam Nelson.
Adam Nelson in particular.
Adam Nelson for sure.
Yeah.
I don't know. On the private side, I think one of the people who's impressed me the most recently is Neil Mehta at Green Oaks. Yeah. I just really, talking to him, it's just such a wide, because they do a little bit of crossover, they do some public market stuff, they do a little bit of early stage, a lot of growth stage, and just like the understanding of everything from the technology to the debt capital markets to the way that he thinks about the companies and like really red teaming things, and then just a nice guy. Like I think he's been one who I've really been impressed by. Like the first time we spoke, he was kind of telling me some of his portfolio companies, and I was like, oh, it sounds a lot like, you could build a pretty good portfolio just copying Tencent. And he was like, yeah, introduce them to Tencent. Like, come on. So I thought I was being clever, and he's definitely a couple of steps ahead of me. But he's been one of my favorite. I'd probably a little more under the radar.
Yeah, and very almost no public presence.
Yeah.
And then on the public side, I mean, are you because you're doing so much research as you're kind of writing up your public stuff, like, are there people that you keep coming back to see what they're doing and kind of learn more?
Not as, I mean, like there's like all the, like I'll read Howard Marks letters, and there's a lot of just anonymous people on FinTwit who I think do really, really good stuff. But when I write about public companies, I'm never, ever, 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 ever going to out analyze somebody at a hedge fund. I'm not gonna be like, oh my God, did you see that like their EBITDA actually is like this? Like that's just never gonna happen. So I'm really spending a lot more time reading kind of like the tech side of it, or listening to something that a founder might have said in a keynote, certainly reading, any kind of like internal memos that I can get my hands on at different companies and all of that. But yeah, I think there's less of, nobody comes to mind on the public side who I'm really just
okay. It's Packy being Packy.
It's just like really trying to find the weirdest takes that I can find on the internet and synthesizing them.
Okay, I love it. So we should start wrapping up. And so I have an optional a lightning round. And then a final question we ask every guest. So the lightning round is, what's one tool, personal or professional, that you can't live without that more founders should use?
Man, this is a new one, and not an investor or anything, but I just got onboarded to Vimcal yesterday, and I love it.
Okay.
So Vimcal is a calendar tool. It looks like Gmail and lets you schedule meetings. My biggest issue with email, and use Superhuman, of course, and like all of that, but my biggest issue with email is that it then ends in a slow, like kind of meeting scheduling process somewhere. And so the fact that that's now lightning speed too was really nice.
Yeah. Okay. All right. What is the biggest misconception about Not Boring?
That's a good question. I'd say the biggest question. So I got one of the questions that I asked when I asked people like, for things that they wanted to know as part of this AMA, someone was like, how do you choose between the things that you want to write about and then the things that you like get paid to write about? And like the biggest misconception is that I'm writing about companies who pay me because they're paying me. And it's really like there are 1,000 startups out there that I want to write about because no one's written about them well. Like public companies, people have written about most of them really, really well and probably better than I will. But most of these startups have never had their stories told or really been analyzed publicly. And so it's really kind of a filtering mechanism there. So I'd say that's probably the biggest misconception.
All right. And then final question that we ask every guest, which is what's one company that you look at for inspiration?
Can I say Stripe?
I mean, of course.
Stripe.
But why? But why?
Oh, man. One, the combination of long-term thinking and short-term action, like that's one of the things that I think probably just across companies, the things that inspire me, and not even that I practice myself because like I said, I have no plan here, but the companies that can do it, maybe that's why they impress me. Yeah. If you can really think long-term, but also be really, really sharp and fast in the short term, I just think that is such an unbeatable combination. And it takes a ton to be able to do that. And it takes a ton to not go into your board meeting and be like, all right, like, I don't know, the investors were kind of pissed about this one thing. So like, we have to focus everything on this one thing this quarter. And so the companies that are able to kind of pull that off, and you can certainly earn it over time. But that is, across companies, the thing that I love is like just this very long-term plan that shows itself in stages. And I think Stripe is obviously a good leading example of that.
Absolutely. All right. Well, Packy, thank you so much for joining us. Really appreciate it. This was a ton of fun.